Hey everybody, it's Shamika. Thank you guys for tuning in. Please like, subscribe, and share my videos. I appreciate your support. So I wanted to make a video for individuals who are in the market for buying a home. You guys know I am always dropping the gems, so please listen closely. So if you are in the market for buying a home, if you are at that point where your credit is 640 or better, remember we do not do 580 or below here, or any of those programs. Congratulations. If you have gotten selected for a program where you're going to get some funding towards the down payment, congratulations. If you got selected for one of the Habitat for Humanity programs where you're going to go and put some sweat equity and all of that, and they're going to give you a home, congratulations, right? So you individuals are the ones that I need to talk to the most, because there's something called a silent mortgage that you don't know that you're taking on. Okay, so what is a silent mortgage, Shamika? Well, a silent mortgage is basically a secondary mortgage or a second mortgage that you are not paying on when you make your principal and interest payments or anything like that. You're not making a payment. Let me say that again. But that secondary or silent mortgage is put there to kind of protect the investment of the individual that gave you the money in the first place. So let me give you an example. If I gave you $10,000 towards the down payment of your home, congratulations. Now, what happens in the event 2 years or 3 years later you want to sell that house? Am I supposed to be out of my $10,000? Well, what the government or the banks have done, that's probably better to say, what the banks have done is they have decided that they're going to protect their investment by giving you this silent mortgage that decreases every year, although you're not making any payments. But what it does is it keeps you from being able to sell quickly, because they're going to put some restrictions on you guys, okay? And let me back up before I get into the Habitat for Humanity. If this is just a grant program, like a federal bond program or something like that, and you got some down payment assistance, read the fine print, guys, because normally what's going to happen is they're going to tell you that although you have this secondary mortgage, it may be attached to you for the next 3 to 5 years before you are released from the obligation to maintain what they put their money into. So they want to protect their investment, but there's a time limit. So most local county governments usually will tie you up from 3 to 5 years. But if it is like Habitat for Humanities, it's anywhere from 20 to 30 years. Okay, so you need to just be aware of it. You're not making any payments on it, so that's great. But you also will not be able to refinance, because if you try to refinance, that money's going to become payable. That's definitely on the Habitat for Humanities. If you try to sell, they're going to put restrictions, okay? They may say, we have the first, not they may say, they will say they have the first right of refusal. They will try to make an offer so that they can protect that investment and not let you have someone move in. They have a couple different ways, but this is the one that is anchoring the most. It prevents, them from, losing their investment. Okay. So I just wanted you guys to know that this is something that they can do, something you guys should be aware of when you are taking money from individuals, to go and get this American dream. Okay. Something else I want you guys to know is statistics show, okay, because this isn't me saying this, statistics show that individuals who take assistance when they are doing a mortgage product, when they are buying a home, if you take assistance or you're on the Habitat for Humanities program, that's considered for low income, you will more than likely fall into debt on top of the mortgage and the secondary mortgage, which is why they put the secondary mortgage in place. Well, that's the second reason why they put it into place, because remember, they're protecting their investment, but this is all a part of protecting their investment. But this is another reason why they're going to do it, because statistics show that you will fall back into debt even with both of these mortgages out there. But let me tell you what brought me to even making this video in the first place. I see 3 people who live in Florida, but this happens everywhere, who have not been able to make their mortgage payments. Okay. One thing you guys need to know, and I'm talking about the Habitat for Humanities. When you sign up with these, when you take this mortgage product, you are more than likely going to make bi-weekly payments. So you're not going to make that one payment that's due on the first. You're going to have a payment that's due every 2 weeks. Okay. The second thing is if you miss your mortgage payments and then they want to foreclose upon you, now both the primary mortgage and that secondary silent mortgage now becomes due. Now, I'm not saying that that is or is not true. If you take a grant, I am sure if you are not able to pay, everybody's going to want their money back. So now this amount is now going to be used against you or charged against you that you're now going to have to pay. Okay. So just know that this is what happens when you take on assistance, which is why I say we are not doing those 580 or anything below 640 programs, because they usually stink and there are things built into it that you may not be aware of. So the higher you can get your credit score, the better mortgage product that you're able to take on, and you don't have to worry about things being attached in the event you can't pay it. But here goes the best part, and I promise I'm going to let you guys go after this. Y'all know I'm a big pro-bankruptcy person, right? Well, here is something that you did not know. When it comes to bankruptcy, there is such a thing as an order of priority. And what comes first? Always the mortgage, if you have a mortgage. Why? Because that's usually the largest debt. And who do you owe? The bank. Okay? So, if you file bankruptcy, and remember, if you are facing foreclosure, I made this video for these women. I wish I knew who you were. But if that's you, you can go and file bankruptcy and stop the foreclosure proceeding up until the day of the foreclosure proceeding, okay? But go and file bankruptcy, and then what happens is, and it'll depend on which bankruptcy chapter you take, but still what happens is filing bankruptcy cancels out the secondary mortgage, okay? In almost 97% of the time, okay? Because there's a priority. So the first mortgage will always be paid because that's the largest one. Then the secondary, which is usually smaller, is going to be next. And then every other creditor after that, okay? So don't say I didn't give you a gem. And if you don't believe me, look it up. A matter of fact, it says, let me see what it says. It says if they need to seize the home in the event of foreclosure. Okay. So if you, and you can read the rest, but the reason why I wanted you guys to see that part, foreclosure, is because all you need to do is go and look at what happens when you file bankruptcy for foreclosure to prove to you that I was right about you can stop a foreclosure proceeding up until the day of the the foreclosure proceeding, excuse me. And 2, you can also look up to verify that what I'm saying about you being able to cancel the secondary mortgage because you filed bankruptcy, that is also true. But anyway, make sure you like, subscribe, and share. And if you like this kind of game and gems, okay, then go to my YouTube page under the same name, Shamika Saves, and subscribe. Thank you. Have a good one. Bye.